Hold on to your hats, folks. The market is absolutely sizzling today, June 27th, 2025. The energy on Wall Street is palpable, with traders buzzing and screens flashing green across the board. It's a day of significant gains and the momentum is undeniable. Major indices are surging toward all-time highs, fueled by a wave of positive sentiment and strong economic indicators. Investors are feeling confident, and the market is responding in kind. It's a broad-based rally with nearly every sector participating in the upward climb. This isn't just a few isolated stocks, it's a widespread surge that's lifting the entire market. The S&P 500 and Nasdaq Composite are on the verge of breaking records, pushing past previous milestones and setting the stage for potentially historic gains. This impressive climb is fueled by serious momentum, driven by high trading volumes and a strong belief in the market's continued growth. Dow futures are up 120 points, indicating a positive outlook for the blue-chip stocks that make up this key index. But the real action is in tech. The sector is leading the charge, with innovative companies and groundbreaking technologies driving the market forward. Nasdaq 100 futures are leading the way with a 0.5% jump, showcasing the strength and potential of the tech industry. What's driving this incredible surge? What are the key factors contributing to this market frenzy? Two major catalysts are at play. First, a landmark US-China trade deal on rare earth minerals, which has eased concerns about supply chain disruptions and boosted investor confidence. And second, hints from the Fed that rate hikes may pause, signaling a more accommodative monetary policy that's welcomed by investors. This powerful combo is rocket fuel for stocks, creating a perfect storm of positive conditions that are propelling the market to new heights. It's lifting optimism across Wall Street, with traders and investors alike feeling bullish about the future. And it's not just big institutions that are benefiting from this surge. Your 401k and retirement accounts are getting a significant boost, providing a welcome increase in your long-term savings. Tech, manufacturing, and consumer goods are leading the way, demonstrating the strength and resilience of these key sectors. This all signals a healthy, innovative economy, one that's poised for continued growth and prosperity. The decisions made today in Washington and Wall Street, the policies enacted and the trades executed, will have a direct impact on your portfolio tomorrow, shaping your financial future. So stay tuned. We're breaking it all down, providing you with the insights and analysis you need to navigate this exciting market landscape. The US-China rare earth minerals deal is a game changer. Rare earths power everything from smartphones to EVs and defense systems. For years, China's dominance in rare earths was a huge geopolitical risk. This agreement removes that uncertainty, signaling stability and cooperation. Tech and manufacturing companies can now plan and invest with confidence. It's a win for American manufacturing and innovation, paving the way for job growth. Semiconductor and EV stocks are soaring because their supply chains just got safer. This deal strengthens America's tech leadership and industrial backbone. It's more than a headline. It's a fundamental shift for the economy. That's why the market is celebrating. Now let's talk about the Fed. After months of rising rates, Jerome Powell finally hinted at a pause, thanks to cooling inflation data. The market sees this as a green light. Less monetary tightening means more room for growth. For investors, a pause means companies can borrow and expand more easily, boosting future earnings and stock prices. Tech and growth stocks benefit most as their valuations depend on future profits. Treasury yields are dipping and the dollar is weakening, making U.S. goods more competitive. The Fed's shift is a powerful catalyst, restoring confidence and fueling this rally. When the Fed eases up, the market accelerates. This is how bull markets are born. Investors are jumping back in. Nike just delivered a blowout quarter, sending its stock up over 6%. The company crushed expectations, showing strength in North America and managing costs brilliantly. Nike's performance proves the American consumer is still strong and willing to spend on top brands. Their smart pricing and cost controls offset supply chain and tariff pressures. Nike is a bellwether. When it thrives, it signals broad consumer health and economic resilience. This report quiets recession fears and boosts confidence across the retail sector. Nike's success is fueling the Dow and validating the bullish market narrative. Excellence wins even in a complex global environment. Nike remains a core holding and a symbol of strong corporate earnings. They just did it, and it's lifting the whole market. The markets are vibrant today, showing strong signs of recovery and growth. Who's leading today's rally? Which sectors are capturing investor attention and driving this positive momentum? Tech, semiconductors, the backbone of modern innovation, are at the forefront. These industries are not just participating, they're setting the pace, and electric vehicles. The EV sector continues its impressive climb, fueled by increasing demand and government support. The rare earth deal, a crucial agreement ensuring the steady supply of essential materials, and Fed's dovish tone, signaling a more accommodative monetary policy, are a double boost for these sectors. This combination of factors creates a fertile ground for growth and expansion. Semiconductor giants like Nvidia, renowned for their cutting-edge GPU technology, and AMD, a key player in the CPU market, are surging, reflecting strong investor confidence in their future prospects. As supply chain fears ease, the improved flow of goods is reducing costs and boosting production. These companies drive AI, powering the next generation of intelligent systems, 5G, enabling faster and more reliable wireless communication, and the Internet of Things, connecting billions of devices worldwide. Today's news clears their path to innovate, removing obstacles and fostering a more conducive environment for technological advancement. EV. Electric vehicle manufacturers are seeing increased demand and investor interest, and battery stocks, the essential components powering the electric revolution, are also jumping, reflecting the growing importance of energy storage solutions. Thanks to more secure access, ensuring a stable and reliable supply chain to critical materials. This access is vital for sustained growth and competitiveness. The deal accelerates the green energy transition, paving the way for a more sustainable future, and supports the entire EV ecosystem, from manufacturing to charging infrastructure. Investors are rewarding growth and innovation, recognizing the long-term potential of these sectors, not just short-term hype. They are focusing on companies with solid fundamentals and a clear vision for the future. Tech is now the engine of the economy, driving growth and creating new opportunities, not just a sector. It's integral to nearly every aspect of modern life. Leadership from chips, the building blocks of technology, and EVs, the future of transportation, signals a healthy, forward-looking market. This is a market that embraces change and innovation. The appetite for risk is back, indicating renewed confidence in the market's potential, and money is flowing into the future, supporting the technologies and companies that will shape tomorrow. What's fueling this wave of optimism? It's the convergence of three powerful forces. First, the US-China rare earth deal reduces geopolitical risk and stabilizes supply chains. Second, the Fed's pause signals confidence in the economy and makes stocks more attractive. Third, strong corporate earnings like Nike's prove companies can thrive even now. The fear that dominated markets is fading, replaced by confidence and opportunity. This trifecta is the perfect recipe for a sustained rally. Investors are shifting from caution to risk-taking, and the evidence is on their side. That's why the bull is running. As exciting as this rally is, and believe me, the energy on Wall Street is palpable, it's crucial to maintain a balanced perspective. We've seen these surges before, and while the potential for significant gains is certainly there, so too is the risk of a downturn. Smart investors stay vigilant. They don't get swept up in the euphoria. Instead, they meticulously analyze the underlying data, consult with financial advisors, and make informed decisions based on solid research. Watch the upcoming inflation data. This is a critical indicator that could significantly influence the market's trajectory. If it cools, the Fed may hold rates steady, potentially fueling further market gains, and the rally could continue. However, a hotter-than-expected inflation report could prompt the Fed to maintain or even increase interest rates, which could put a damper on the rally. Global growth matters too. The health of the global economy has a direct impact on U.S. markets. U.S. companies are global players with significant operations and revenue streams tied to international markets, so keep an eye on Europe and Asia. Economic slowdowns or political instability in these regions could negatively affect U.S. corporate earnings. The US-China deal is a big step, representing a potential easing of trade tensions, but ongoing cooperation is key. Any breakdown in negotiations or renewed trade disputes could trigger market volatility. Listen to what CEOs say about international business in the next earnings season. Their insights into global demand, supply chain challenges, and currency fluctuations can provide valuable clues about the future direction of the market. Despite risks, today's optimism is built on real progress. We're seeing positive signs in various sectors, suggesting a potential for sustained growth. Geopolitical breakthroughs, however fragile, are contributing to a more stable global environment. A friendly Fed, signaling a willingness to pause or even reverse interest rate hikes, is providing much-needed support to the market. And strong corporate results exceeding expectations in many cases are bolstering investor confidence. This isn't speculation, it's a rally grounded in fundamentals and innovation. We're seeing real advancements in technology and significant improvements in key economic indicators. Tech, chips, and EVs are leading, driving innovation and creating new opportunities for growth, signaling long-term growth. These sectors are poised to benefit from secular trends that are likely to persist for years to come. This could be a turning point, restoring confidence in the market and the economy. It's a chance to rebuild portfolios and position yourself for future success. Stay informed, stay ready, and be prepared to adapt to changing market conditions. The game is on, and you need to be in it to win. But remember, winning requires knowledge, discipline, and a well-thought-out strategy.